All right, all right, all right. Hopefully everyone can hear me. I'm gonna wait for everyone to jump on for the Credit TV live event for Student Loan Assist. Just gonna wait a little bit till I see some people getting on here. I see some people jumping on. Hopefully, let me know if you can hear me. I was having some issues earlier getting testing this out, just making sure with my new Bluetooth that I was working correctly. Testing, testing, testing. Can you guys hear me? I'll just wait to hear some chat, so hopefully I'll see that come through here. I'm seeing some people jumping on. There we go. More and more and more. That's good. So just waiting for everyone to jump on tonight. What we're doing here is we're going through Credit TV, Student Loan Assist. So if you guys could let me know if you hear me. Okay, guys. To hear me? Sure, yeah. It says I'm on. Just making sure that you guys can hear me. Perfect. Ashley, thank you. There we go. Sherry. All right, I like it. All right. So, okay, guys, that's good. Everyone can hear me. I'm just going to kind of go through a few things here while we wait for more people to jump on. I jumped on literally right at 7 p.m. Central. My name's Jared Havens. Just to give you guys a quick little intro to who I am the CEO and co-founder of Credit Life. A big part of what we do here is we help clients who are looking to not only repair and improve their credit, but really we're looking to help clients that are motivated, goal driven to help hit their specific goals, as well as help them improve both credit and financial stability. And student loan repayments a big part of that. A lot of people have a hard time navigating their best options with student loans. And so that's what I hope to go through here tonight with you guys, is really diving in deep with all the different student loan options. There we go. Tyler just jumped on. Wanted to intro Tyler. Tyler's going to be in the chat tonight, helping moderate this Facebook Live event with Credit TV, called Student Loan Assist event that we're doing here tonight. Tyler is actually been a part of Credit Life now for a few years. In the very beginning, he actually worked side by side with me when we were a team of 4. So a long time ago when we were a small team. He started out as a coach, and he really progressed helping the back end, working with our current clients and acting more of a client support. He's absolutely phenomenal. And with that, he has a ton of knowledge when it comes to student loans. He's extremely organized. He's very effective. His communication is on point. And so he now has recently been promoted to run our Student Loan Assist division in the company. So everyone, welcome Tyler. He's in there. He just jumped in. He's going to help moderate this live tonight. And I'm just going to start jumping into it, guys. Looks like Sherry, and that's what I want to do. I'm just going to start with fielding questions. I think that's the best way to do this tonight, is just going through Q&A right out the gate. So Sherry says, as a parent, I signed a Parent Plus loan from Fed Loan Servicing. She's not paying anything. I'm making the payments. She said she would pay. Is there anything I can do about this? Okay, so $6K loan with a $10K payback, $4K interest. Okay. Oh, Walter says he can't hear. Oh, nope, Tyler, just want to make sure. Can everyone hear me okay? It looks like Walter says can't hear anything. Just want to test before I move forward. Can everyone hear me okay? Testing, testing, testing. Can you guys hear me? I'll wait for a little feedback. Looks like I'm getting a lot of things. Okay, cool. So Walter, I apologize. I don't know what's going on, Walter, but I'm just going to keep moving forward here then. Okay, so when it comes to Parent Plus loans, unfortunately, the only issue, or the only option, I should say, surrounding Parent Plus loans is having the daughter, the son, they would have to refinance that Parent Plus loan out of your name into their name. That's the issue. So if you're running into a situation where they're not paying, more than likely that's not going to be an option. So unfortunately, you're kind of stuck with that. I'm just being transparent with you. The reason being, a lot of people don't know this. When your son or daughter's enrolling into college, a lot of times the Parent Plus loans are pitched as if you're co-signing on those loans, when the reality is on a Parent Plus loan, you are taking on sole responsibility for that debt. It only reports specific to your identifying information, your social things. It is not reporting on the son or daughter. So unfortunately, the responsibility does fall on you. So that's the only option. However, with Parent Plus loans, there are different repayment plans we can look into to make it easier to handle financially. So, and then Lovely, I'll make sure I'll do that this evening, Lovely. I'm sure you email me, I'll reply back. Yep, nope, Sherry, no problem. And if you want any help with this, I know Tyler's going to put our link out on there. Our team here would love to talk to anyone to go through an initial analysis of your student loans and help identify the areas that make the most sense for repayment. So definitely take advantage of that. Yes, we're a cost-based service, but what's nice with our Student Loan Assist division is we first go through and figure out what are the best options, and that way, if it's something that makes sense to retain our services, at that point you have a clear direction of what to expect, and it really does make sense. But at least take advantage of that initial consultation, so that way we can go through that with you guys and do that analysis. So it looks like Rebecca says, my student loans are consolidated, and now they're wanting $500 to $600 per month, which is unrealistic. Is there anything I can do to make so I can afford it? Without knowing the specifics of your situation, I don't know, but here's what I'm explaining. There are a lot of different options, repayment options surrounding federal student loans. So you have more conventional repayment options, which would be considered standard fixed payments, standard graduated, extended fixed, and extended graduated. The difference between those two is this. The term is different, so length of term anywhere from 10 to 20 to 30 years, dependent on which one we're applying for. But the most important thing is a fixed really is just a fixed payment based on the weighted average interest of all your separate disbursements that you now consolidated, and you have a fixed payment based on that, more of a standard loan. Graduated is a little bit different. What they do is they start out with a lower monthly payment, and every 2 years it increases in its monthly payment over time. And what that's used for are people who are going into a position where they have a potential to make more money in the future in the coming years, but right now, currently, they're only able to afford so much. So it's a really good option to start out with a lower payment, and then over time, you can budget yourself in with your changes in your career path. Those every 2 years, that payment's going to go up. Now, Rebecca, now I'm going to jump into income-driven repayment options. There's actually 5 different options available, okay? You have Repayee, which is revised pay-as-you-earn. You have pay-as-you-earn. You have income-based repayment. You have income-based repayment for new borrowers. And you have income contingent repayment, okay? What that means is they're all different options where they base the repayment amount off your household income, off your tax filing status, as well as cost of living per zip code. They're basing it off of what they call discretionary income. They're income-driven repayment options, okay? Now, I don't know your income, Rebecca, but let's just say, I don't know if you're on there, but, let's just say you're someone that's single. Maybe you have a dependent, so you're filing head of household, and you make, $50,000 a year. Well, then what they're going to do is they're going to take $50,000 adjusted gross income. They're going to take the tax benefit there of one dependent, so a family size of 2, and then based on where you live, they're going to adjust that payment based on that. I can tell you this: in most cases, the income-driven repayment plans do offer payment relief if you do the right one. This is where there's a huge issue, guys, just so you know. A lot of times what people do when they're trying to navigate through their student loans, they contact their servicer. And that's wrong. I'm telling you guys right now, that is not the best option. Here's why. Anytime that people are doing any sort of proactive research on student loans and they reach out to their servicer, a lot of times what they're doing is they're taking in your information. So you're saying, hey, I'm Rebecca here. I can't afford this payment. What are my options? And they're like, okay, that's fine. Well, let me just get some information from you here. They're just more of a teller, just taking information. And they're going to say, okay, well, what's your income? What do you have any dependents? Blah, blah, blah. Well, I can see here, it looks like you qualify for X. Well, a lot of times what they're doing is they're pre-qualifying you for one of the 5 different income-driven repayment plans, but more than likely, they're going to quote on income-based repayment or higher, meaning they're providing payments on certain loan options that are not necessarily the best. For instance, I just had a call today with one of our clients that literally was quoted a little over $500 a month, and she was going, I can't afford that. And that was based off income. What we found out is that the servicer was quoting off income-based repayment, when in all reality, they actually qualified for pay-as-you-earn, which is a lower payment option because they base it off a lower percentage of discretionary income. So that's very important for you guys to know. There are a lot of options. And so what I'm saying is that you want to make sure that you work with more of a consultant that's really going to navigate all the different repayment options, as well as evaluate what your goals are in the future, to make sure that we're putting together the best plan for you to make sure you can afford your student loans, as well as making sure we're doing it in line with what your goals are in the future when it comes to lending goals. So I hope that answers your question, Rebecca. I would honestly say, knowing that, let's first place you back into a short-term forbearance to allow for consolidation or repayment change dependent on the status of your loans. And there's Mark actually booked our link. Take advantage of that link. Let's schedule a consultation. Let's go through a full analysis and figure out what options are available so you can make an informed decision, okay? Let's see here. Judith, I have student loans and parent loan. Can they be consolidated? What student loan company is best to consolidate with? All right, so Judith, it really doesn't matter, as long as they're federal loans, it really doesn't matter who you consolidate with, because what you want to do is you want to do everything through Department of Education or federal student aid. You want to look at that like the parent, right? They own it all. They're the government. So you have student loan servicers, so you have Fed Loan Servicing, Great Lakes Higher Education, Navient, Mohila. There's a few more. I mean, there's a few there that what they're doing is they're servicing, or Nelnet's another one. They're servicing the debt, okay? But above that, you have the parent, which in this case is Department of Education. So what we want to do is we actually want to first go through and see what your separate loans or loan disbursements qualify for. What are they eligible for? And a lot of times then what we'd want to do is look into different consolidation options or different repayment options. If you have any loans that are Parent Plus loans, and if you have any loans in your name as well that are not Parent Plus loans, yes, there is an opportunity for consolidation in your name, but here's the one thing to keep in mind. Not all student loans or disbursement of loans qualify for the same repayment options. So what happens is, even if you do a consolidation first, let's say, and now you have one new loan, and now you're applying for pay-as-you-earn, as an example. Well, Parent Plus loans don't qualify for pay-as-you-earn. So even though it's a new consolidated loan, when you apply and go through the application process, which is pretty extensive, of applying for pay-as-you-earn now as a different repayment plan, that more than likely is going to come back denied because the original disbursement itself that was consolidated into that new loan does not qualify for pay-as-you-earn. So what you want to do is you want to make sure that you guys, and that's why, once again, this isn't an infomercial, I'm just saying, take advantage of our team here, just to really navigate through these options. We want to help you because we just want to make sure that in certain cases, strategy comes into play where we'll go, okay, well, maybe what we do is we consolidate these set of loans because they do qualify for the lowest income-driven repayment plan. And then what we do is we put the Parent Plus or a different type of loan into its own category, and ultimately we're now having the least amount per month for total outgoing payments. or best repayment option. So there's actually, Judith, just so you know, there's a lot of different options there. And once again, we'd need more information to really go through and navigate through all those options. But yeah, there definitely are options. So let's see here. So we got Ashley Jones. Have you worked with a client who has successfully had loans discharged with public service loan forgiveness? I'm 12 payments into my public service loan forgiveness program. I've read several stories of people saying they've completed the 120 payments but unable to discharge for various reasons. That is an awesome question, Ashley. So me personally, I'm just going to be honest with you. I have not helped a client yet. I have not been doing this long enough to see someone successfully, one of my personal clients, graduate from the public service loan forgiveness program. However, I know quite a few people that have successfully gone through the program, okay? So not any of my clients, I've been doing this now for 6 years, but I know a ton of people that have. Here is the issue that I'm going to tell you guys right now. A lot of people do not understand that they may have went into an income-driven repayment plan with public service or debt forgiveness eligibility, but didn't successfully enroll into that program specifically. That's an issue. Or they did not successfully recertify not only their income each year while they're in an income-driven repayment plan, but you should also recertify your eligibility into the public service loan forgiveness plan. Those are the two big ones. One second here, I'm gonna grab this. That's a huge one, guys. You need to make sure that each year, here's how it works. Any income-driven repayment option, once again, there's 5 different ones, all qualify for debt forgiveness eligibility. But the most important thing is when you now couple that with public service loan forgiveness, you have to make sure that each year, as you're going through the plan around tax time, the servicer then reaches out to you and says, hey, we need to recertify your income to then adjust based on previous years' adjusted gross household income, because once again, that's how they factor in the monthly payment. Well, when you're in public service loan forgiveness, there's actually an option to not only recertify your income, but you should also recertify your eligibility for public service loan forgiveness. So at that point, you're actually tracking not all your payments and you're recertifying your eligibility for it. Another thing to keep in mind is that the White House administration is essentially, from my understanding, they're getting rid of it. So anyone that's in it should remain in it, is what it sounds like. So that's good, but all the more reason why you want to make sure that you're doing everything the right way or correct. So that way, if it does go away, the last thing you want to do is not properly recertify your eligibility, and all of a sudden now you're out of it, and you're back into the standard debt forgiveness eligibility term, which is 10 to 25 years compared to 10 years for the forgiveness. So hopefully that answers your question. Would love to talk to you. Honestly, anyone watching this, I'd love for you guys to schedule a initial consultation so we can go through these and just really make sure that you're set up the right way, okay? Because it's a big deal. Taylor, is there anything that can be done to lower payments on private Sallie Mae loan other than the interest-only payments? Okay, so really the only option are the interest-only payments. However, if you do have a good credit score, and if you have a decent or a good income, I'd say, where you have low debt-to-income ratios, there are interest rate reduction refinancing options. In most cases, with the clients that I've worked with, their interest rates range anywhere from 6 all the way up to 9%. Now, it could be higher than that, it could be less than that. I'm just giving you an average of what I see with private student loans. Knowing that if you are in an area that's between 6 to 9%, there are a lot of options out there with private lenders, Wells Fargo, Citizens Bank, SoFi, Credible. There's a ton. Edvest and You. They keep coming out, and it's not that they're new banks. What it is there's opportunity that they're recognizing of qualified borrowers to refinance their private or federal student loans, do an interest rate reduction refinance to a lower interest, and also potentially lower the payment based on what the term is of the loan. The term can range anywhere between 5 years up to 20 or 25 years. I have not seen very many 30-year term private loans. The majority go up to 20 or 25 years. keep in mind, anytime that you're looking into interest rate reduction, refinancing, or financing in general for student loans, the shorter the term, the lower the interest. The longer the term, the repayment term, the higher the interest. So to give you an example, I actually do this all the time with clients. This is a big part of what we do with our certain set of clients that are looking for, this type of solution. I've seen the difference of anywhere between 2.5% on a low with a lower term if they qualify. And let's say you went from 5 years to 20 years, that interest rate could easily go up to 4.85, 5.25%. And that's because there's a longer term, therefore there's higher risk for the lender, therefore they put that risk on you, they charge you more. That's what it comes down to. So credit score is a big one, debt to income ratio is a big one, and the term of the loan is a big one. All those things play a huge factor into refinancing student loans. But it is an option. It's a huge option. It's very popular right now, actually. Melanie says, my student loans were in collections and they contacted me. I qualify for the income repayment plan where I make 9 monthly payments on time. I'll be taken out of collections, and at that time, I'll need to make new payment, or I'll be able to do into new repayment options. Sounds obvious, but is this a good thing? Okay. In most cases, Melanie, yeah, it is. Here's what you want to do, though. I don't know if you've already officially moved forward with it. Here is the key thing with rehabilitation, guys. I'll explain how it works. This is for defaulted federal student loans. You have a defaulted federal student loan, you've gone through an issue in the past, whatever it is, you're trying to get back on track. What they've done is they've created an option to allow people to go into a voluntary repayment plan based on your financial situation or your financial status, and then do that over a course of 10 months, but you have to make 9 payments on time in a 10-month period to then officially be rehabilitated. And at that point, yes, it goes out of default and then gets sent to a new servicer. So it's more than likely with a collection company now, and then it will ultimately go to a servicer. Now, here is what most people miss with rehabilitation. One, you want to make sure default remarks are removed from your credit report when you have been rehabilitated. That's a key one, guys. Now, there's a lot of misinformation out there around this. A lot of people, when they read that or are being educated on this or being sold on this, I'm sure some of you have been receiving phone calls, sales phone calls from student loan companies acting like they're with the Department of Education, charging you to help you with this, but really not providing you any sort of service, which is a horrible thing. It's happening all the time. It's a huge issue. You want to make sure that, and what I mean is the information they provide is normally bogus. Default remarks are removed, meaning the verbiage or status of default is removed off your report, but the account itself remains. And if there's any late payments that led up to that default would actually remain. Okay, so keep that in mind. I'm not saying that you can't go back and investigate that strategically for potential repair and removal that way through a credit repair process, but what I'm saying is in rehabilitation, it doesn't mean late payments are removed. What it means is you want to negotiate default remarks to be removed from your credit profile, which actually is pretty significant when it comes to the credit profile strength and just casting a better light for lending options. Another thing that you want to do is you want to negotiate a reduction in collection fees and accrued interest. That's huge in itself. I have literally saved people thousands of dollars going into a rehabilitation where payments can be as low as $5 a month, and we save them a few $1,000s on top of that. So that's another big one. Removal of default remarks, reduction of collection fees and interest, and going into a repayment plan that you can afford based on your statement of financial status. That's a big one. But yes, it's a phenomenal option to get out of default. It's a phenomenal option to work within your true financial situation because you're actually explaining to them what your bills are, all that, what your actual take-home income is, all that plays a big role into factoring in that monthly payment. The only other option to get out of default is in certain cases if you have not been submitted to the Treasury offset for garnishment or tax offset or levy. In certain cases, you actually need to apply for what's called an income-based repayment consolidation, or in certain cases, revised pay-as-you-earn to get out of default that way. Okay, so, but when you do that, you are assuming the validity of that debt as well as all accrued interest, collection fees, and costs, and you're just assuming that debt and you're going into repayment on the total amount due. So that works in some cases, but in most cases, I'd say rehabilitation is by far the best option. I see you said something again here. While I'm in the rehabilitation, all the collections will stay on my report, and there's nothing I can do for another 7 months. She's made 2 payments. Yeah, so that's awesome. You made payments. Yeah, there's really nothing you can do. I would not recommend investigating those accounts while you're in rehabilitation. There's been many cases where certain servicers, if an account's in dispute, will stop the servicing or consolidation or repayment change of a student loan. So I'm not saying not to exercise your legal rights of investigation. What I'm saying, it's all about timing, and I'm not trying to scare you, and I don't know for sure when it comes to the defaulted student loans, but I can tell you it doesn't make sense in most cases to investigate or challenge the defaulted student loans while in rehabilitation. It makes more sense that after the rehabilitation is completed, you're then with a new servicer to then go back and work on credit repair, and I'd honestly recommend working with a professional on that at that time to repair it that way. That's going to be your best option for strategy purposes. So, okay, cool. Ashley, nope, thank you. Thanks for being on the Facebook Live tonight. Jane says, why is it when you call collections, they refer you to the school and the school refers you to the collections? Who are you really supposed to pay? So in most cases, I would say that by that statement and just my history of helping people, more than likely that's a collection that's not maybe federal. You might be looking at actual tuition costs with the school, or something directly with the school that was then sent to a third-party collection. That can happen, where there might be a little bit bounce around of who you're supposed to be working with. And in that case, if that is a situation, a lot of times you have to pursue more traditional debt management or debt settlement tactics, because rehabilitation isn't an option if it's technically a private loan. So that could be an option. But I can tell you this, if it is a federal loan and if it's with a federal third-party collection company servicing that debt currently, they're 100% going to be trying to collect on it because that's how they get paid. So there has to be some sort of unique situation happening right now that you're, that you're getting the runaround. I'd recommend, Jane, definitely click one of our links there, and someone could post it again, maybe one of the moderators. You know, I think that you should schedule an initial call with us. Let's just go through and figure out exactly what's going on and help navigate you through that process just a little bit better. Rita says, let me expand that. I have a small student loan taken out 4 years ago, and I was signed up for classes, but because my GPA was low, FAFSA did not cover and told me I had to pay out of pocket for these classes, and didn't have the funds for them. I've never attended the classes in the school it drew me. They are looking to collect. Although I never went to the classes, is there any way to get this removed or forgiven? Unfortunately, more than likely the answer is no. The reason being is that when you're going there and obtaining financing for student loans, it's kind of on you. The only way that you might have a potential of getting some sort of forgiveness or discharge is if that school has been shut down and has lost their accreditation. Now, if they've had any sort of deceptive practices, lost their accreditation, been shut down, that's when options open up for potential discharge of debt. But typically, for someone that's gone through and just ran through some issues and just wasn't the right time for them, the banks don't care. You know what I mean? They're going to pursue it. So I would say bite the bullet. Let's figure out the best way to get into a repayment that works within your budget so you can move on. Because the last thing you want to do, guys, you don't want to play the game of trying to, you know, I understand how it is. Everyone's situation is different. But you don't want to play the game where you're trying to hide from things anymore. You know what I mean? I get that. The human nature, when we have a lot going on, we kind of want to bury our head in the sand, so to speak, or turn away. You know, that's not what you want to do. Excuse me. In fact, I just had a talk with a client today. You know, he's been working with me now for 9 months. He literally came to us with low 500 scores. He had student loans, he had collections, he had late payments, he had very limited accounts open. You know, a lot of our clients are like that, honestly. And now he's in the higher 600s, close to 700. And the last thing that we have to address, it's not student loans, we already handled all that, but the last thing he had to address is tax liens. And he told me on the phone today, and this is a grown man, he goes, you know, honestly, I'm scared. He's like, it's something that he's been running from for so long that he had a hard time mustering up the courage to address it. But I told him, I said, what you're going to find in life is that in most cases, you can handle it. You just have to be proactive and address it head on. That's the key. You know, there's a lot of options out there, regardless of the situation, especially if you're doing anything surrounding financial, where we can, you know, either we're helping you or you're doing it yourself. There are options, and you will find that, yes, there's that lingering debt out there, and you don't want to pay it. But the best option in most times or most cases is just biting the bullet and figuring out the best way to get back on track. You know, no more excuses and just get on it. So I'm not saying you're like that, Rita. I'm just saying that, you know, that's what I believe in. You know, I believe in true fixes. I believe in financial discipline changes. I believe in money management. I believe in credit repair, credit building, credit management, student loan debt management. You know, I believe empowering people so that way they can fix their situation for real for the long term and start opening up opportunities. You know, it kind of actually just before this Facebook Live, I was talking to another client here locally in Minnesota. She's a little bit older lady, just recently went through Chapter 7 bankruptcy. And, you know, we're talking and everything I was explaining to her, she was like, oh my goodness, I wish I would have talked to you before, you know, because we're helping her navigate the understanding that she just recently got an auto loan with high interest rate. You know, I mean, she's on a fixed income. She's got a high interest rate auto loan. She's paying more for her insurance premiums. You know, I was explaining to her that, hey, yeah, we're going to help you repair your credit, but it's way more than that. Money management and credit go hand in hand. We're going to help identify areas where you can save money through interest rate reduction refinancing. We're going to help you, guide you on when you should get new quotes for insurance to start lowering insurance premiums. And she was like, oh my goodness, I'm so thankful I met you, you know. And so, you know, I kind of went off on a tangent there, but that's what we do here, and I hope that you guys get the same type of from help from us as well. But Melanie said, I'm looking at talk to someone further. I'm getting ready to hire Credit Life, and most of my collections are student loans. So Melanie, yeah, you know, that link that we booked on there, book that initial consultation. I'd love to talk to you, Tyler. Any one of our senior Credit Life coaches would love to talk to you, and we will 100% point you in the right direction and get you in the right path based on your specific situation now and what you're looking to accomplish. So I'd love to help you. Judith said, are you saying to go through Department of Education, not Nelnet, my servicer, for repayment plans? As of right now, I have a repayment plan through Nelnet. My payment is $0 due to low income. Also, do they offer income-based repayment plans for Parent Plus loans? So, Judith, I'm not saying you can't go through your servicer. If you're in a position where you qualify for a $0 a month payment plan due to low income, it sounds like you're already in an income-driven repayment plan. So more than likely they've taken care of you. However, what would make sense, Judith, is for us to take a look at your situation and also kind of forecasting out the future of going, okay, well, what was my income previously and what is it now? But what's the potential? Now, if it looks like you're always going to be in that realm of lower income, you know, after your write-offs and your adjusted gross income, that's fine. Let's know that, so that way we place you in the right repayment plan that always guarantees you the lowest payment, potentially always zero. Or if it was at a time where maybe you had a loss of job or your income was reduced for any reason, you're making more money now, well, then what we want to do is we want to forecast out based on the eligibility of the loans to see what makes sense for any changes in the future, to always make sure that we're rolling with the punches, so to speak. You know, if we know next year when you recertify your income that your payments are going to go up to X, maybe we make some adjustments now or plan for those adjustments now, so that way we put you in a spot where you can handle the repayment and you don't get in a position where else you're falling behind on payments and having derogatory marks on your credit report. Yeah, there are options for income-driven repayment plans for Parent Plus loans, but it's very limited, okay? You're not going to have all the different options. It's limited. So we'd have to wait, and we'd have to actually pull up the database of all your disbursements and then look at the actual eligibility specific to that disbursement, because disbursement dates as well as type of disbursement all play a role in what you're eligible for. So I'm not trying to dodge your question. I'm just being honest with you. I don't want to say something and be wrong. You know, I want to just give you the right answer. So, yeah, once again, Tyler posted it. You know, if you want to book a consultation, we'd love to help you. Okay, let's just go through it and figure it out. The school I went to shut down. How do I get out of collections? Okay, so So this is Ms. Thickness Red. I like that name. There we go, Johnson. So if your school was shut down, and what you'd want to do is search in Google, start by Google and say, the name of your school, and look loss of accreditation, deceptive practices, deceptive marketing. Find out why the school was shut down. And what you'll find is if you start seeing some sort of advertising for student loan discharge, you should reach out to us. Now, what I'm saying is there's a lot of deceptive marketing out there where they make someone feel like they qualify for discharge, but actually what they're doing is placing them into an income-driven payment plan with debt forgiveness. This happens all the time, and people think they're getting discharged when they're not. We want to make sure without a doubt, do you qualify for potential discharge for a portion or the balance due of the federal student loan debt due to school closure, loss of accreditation, or falsifying information? There's a lot of different terms for it, but we'd want to look into that. So I would say, reach out to us on that, schedule a consultation. We could quickly look that up. I do that all the time with my clients. I'll look it up, we'll figure it out and see if that's an option. Now for us, just so you know, we do not offer that service to help someone go through the discharge. We used to, and the reason why I recently stopped doing that, just so you guys know, is it's a long, drawn-out process, and it doesn't mean that we can't necessarily help you, coach you through it, but a lot of the information they're to ask you, we don't have that. So a lot of times it makes sense for us to point you in the right directions for you to apply, because then someone's going to reach out to you to walk you through the process of discharge from Department of Education or the servicer. So, and I can explain that. If you want to book a consultation, I have no problem explaining that to you so you guys understand what I mean by that. My student loans are an offset department. I think they will be taken away when I file taxes. All right, Diana, here's what you got to do. There is a phone number. Everyone that's watching this, if you have defaulted federal student loans and you think you're on the federal offset, type in Department of Treasury offset phone number. Start with that. There's a phone number you can call, and it's just going to go prompt you through an automated process where you put your information in. It'll tell you if you are on the offset list and what it's for. That's the first step. Second step, if you are on the offset list, you definitely want to make sure you get into some sort of repayment plan, typically rehabilitation. And you want to, when you're going into rehabilitation, I do this for my clients all the time, negotiate that after the first, second, or third payment, dependent on the collection company, to have them release you from the Treasury offset list. So here's what you do. Hold off on filing taxes. Okay, let's hold off. Let's address this right now ASAP and see if we can get you off that list. Now, even if we can get you off the list, but we're worried about time, you can always file an extension. As long as you're doing it within the timeline and do it correctly, you can file an extension, and that way you can wait till you're off the list and then file if you're due a refund, okay? So there's a lot of different ways you can navigate through that so you can maximize your potential of getting your refund and also taking care of your debt obligations the right way, okay? So Diana, if you want some direction on that, boom, once again, book a consultation. Angelina says, sorry, just joined. You may have answered the question. How do I get my loans consolidated or condensed on my credit report? Probably consolidation, I'm assuming. There are 5 different reports with late payments. I was never late since it was in deferment. The only one on the report shows a balance. The others say $0 closed. Interesting. So if I'm understanding your question, let's see here. If I'm understanding your question correctly, Angelina, it sounds like you have 5 different loan disbursements on the credit report, all showing late payments, which you're saying you were not late on, but yet all of them but one are showing $0 balance. So if that's the case, you wouldn't necessarily qualify for consolidation just because if for any reason some of those have been paid, then and only one with balance, then we can only work with the one. I mean, we can change repayment plans, but let's just say that you do qualify for consolidation. Maybe there are some loans and it's just not reporting accurately for whatever reason. Yeah, the best option in most cases is to pursue a consolidation, consolidate all the separate disbursements into one new loan, and then I would say it makes sense to kind of distance yourself a few months after you complete that process and then go back and investigate strategically the late payment history over time through investigation and potentially repair it that way. Now, when I bring this up, guys, I'm going to jump into a little bit of education surrounding credit repair, just because I've noticed in the group, it's a very large group, it's a fast-growing group, and I don't want this to come across negative, but here's the truth. Don't just feel we can just get anything deleted, whether it's us or yourself. It doesn't really work like that. You know, here's how investigation works. The whole point of credit repair and investigation is working within your legal rights and specifically challenging aspects of the reporting history within the account in a way that's difficult for the creditor to verify, which at any point they're unable to verify what's being challenged. The credit bureaus then deem that information as no longer valid, so therefore they either repair that trade line or permanently delete it. But that sounds simple in a way, but it really isn't. You have to know what you're doing. You really do. It's much different. Like, let's say if you have collections, and collections get bought and sold all the time, every 3 to 6 months, basically. Well, if I go through and dispute this collection, and this collection company isn't even pursuing the debt anymore, well, yeah, there's a better chance of getting that removed, right? But late payments, charged off accounts, there's certain accounts that realistically take a lot more strategy, and we got to make sure we do it the right way. So I just don't want you guys to think that it's something that's easy to do. No, don't get me wrong. It's an effective process. I look at credit repair as a bonus. You know, I talked about it earlier. What to me, what credit repair is first identifying what happened in the past. Were there any mismanagement or any issues in how I handled certain life events? I want to look at how I'm managing money now. I want to look at my financial disciplines now. I want to look at proactive steps that I can take now when it comes to credit building, credit management. I want to build and maximize on positive information on my report and my financial situation. That, if you just do that alone, you're guaranteed to succeed when it comes to credit improvement. Okay, it might take a little longer, but you're going to get there. Credit repair is a bonus. Along the way, when we can repair and remove derogatory negative information off the report, now we have less weighing down the score. We've been building more positive here. Boom, scores go up faster, okay? But that doesn't do you any good if you're not honing in on what needs to be done now moving forward proactively when it comes to debt management, credit building, credit management, things like that. So I wanted to bring that up just because I'm not downplaying credit repair. I'm not downplaying your ability to investigate and remove information. I just feel like there's a lot of information out there, and it comes across in a way that either people kind of feel entitled that they can just get something removed, or they feel like it's easier than it is. It's a process, you know, and there's no guarantees, okay? So let me get back to it. So it was Drake School of Business. It sounds like I've heard of that. They went out of business for fraudulent. Yes. So, yes, that's the one. Then, if that's the case, you're going to want to follow the process to file a discharge, you know, based on loss of accreditation. So, if you want a little bit of guidance on that, take advantage of that consultation. I have no problem, you know, spending some time with you on the phone, kind of explaining how that works and guiding you on what needs to be done. In fact, maybe Tiffany, if you're on, remind me between tomorrow and the weekend, I can actually start posting that type of information into the group and guide you guys as a proactive do-it-yourself option, on what needs to be done if your school was shut down due to deceptive practices or loss of accreditation. So, and if I was to post that, I'd post it in Free Credit Repair Advice and also our student loan page, just because now that Tyler's taken over our student loan division, heading that up, I really like to start moving things over into the student loan page that we have that's linked with this, just to kind of keep things separate between credit and student loans. So, all right. Let's see here. How often is the offset list updated? Once it's on there, it's on there, but once it's taken off, it's taken off. I guess that's how it works. For instance, when I'm working with rehabilitation and negotiating to have someone removed off the Treasury offset list, typically within, I'd say, a few weeks from the first payment, if that's what was negotiated, you're off. So what we do is every week we'd follow up, call that number, or you would, see if you're on it or not. If you're off it, boom, you're golden. Literally, you can move forward with filing taxes in confidence at that point because you're off the offset list. And if you're due a refund, you'll get that refund. So I'm not a tax professional, okay? I know enough to be dangerous, but I know how that works, okay? So that's going to put you in the best position to be able to take advantage of that. Oh, awesome, Judith. You're doing a express audit with me on Monday evening. I love it. No, I'll just put notes in there. That's fine. After this is done, I'll put notes in there that we're going to talk about student loans. So don't worry about it. In fact, I already do that, and our team does that. So, guys, for anyone who's wondering what the Credit Life Express audit is, I'm telling you right now, take advantage of that. It is a phenomenal opportunity for anyone that has questions surrounding their credit, debt management, student loan repayment, anything in that realm. What we do is you're going to send us over your online credit monitoring information. So Identity IQ, Smart Credit, or Privacy Guard are the only ones that we'll use, because we have our own system, and we have to review a specific type of report that works with us and how we like to review reports, because we need the details. We're going to analyze everything that's on that report, and we actually develop this product and send to you via email in a PDF form, where it's going to show you what's going on with your port for real, what areas you need to work on, as well as where you're doing good. Not just credit repair is going to identify everything. It's the entire holistic approach. It's going to help lay that out for you in a 20-page document. And it also comes with a coaching session with me, with Rick Wenner, the Oracle, with Jeremy, with Tyler, with Chaz G. We got a Chris Kruger. We have a phenomenal team here, guys, no joke, and take advantage of that. It's right now, I do believe standard pricing is $39.99, but we do often run some discounts every so often. So look out for that. If you see it discounted, that means we've discounted it as a sale price, and that's great. But it's a phenomenal opportunity, guys. I'm telling you, especially for someone that, let's say, you're on the fence about hiring us to fully retain our services. It is a perfect segue to really go through a very detailed coaching session on what needs to be done. There's a difference between that and the initial consultation. Don't get me wrong. The initial consultation itself is extremely valuable, and the consultation is no charge, but it's more of an introduction to the program, where we don't have the report, we don't have everything in front of us that we need, we don't have time to review anything. The Express audit, yes, you're paying for it, but it's not that much, and you're getting so much value for it, and we're able to really go through what's going on, be prepared for that call, and immediately start directing you in the right direction. So whether you're a do-it-yourselfer or you decide, hey, you know what, makes sense to hire you guys, regardless, we'll be happy, okay? So there's a huge benefit to doing the Express audit. I don't know if Tiffany's around or any of the mods, if you guys have the link to Express audit, or if you look in the group and just do Credit Life Express audit, I'd say everyone take advantage of that, okay? All right, cool, so I'm gonna keep moving here. I'm having fun with this, guys. Hopefully I'm not talking too fast. I'm on isogenic shakes. Maybe you guys can see it. Boom! I got the whole office going. We're losing some weight here. We got Jeremy's on it, Rick's on it, I'm on it. My business partner Brian's about to start it. He's actually not overweight, so it doesn't matter, but he'll get healthier. It sounds like Chris Kruger might be doing it, so yeah, we're getting healthy here in the office, and I have a ton of energy right now because of it. So, all right, cool. So I'm gonna keep moving here. We got the numbers to the offset numbers. Perfect, guys. Thank you so much for doing that. Yep, Judith. Yep, we'll talk about that Monday evening. I'm so excited to be talking to you, by the way. Yeah, cool. So it looks like I've answered all the questions. All right, so guys, quick recap. Let's just go through this real quick. You have student loans. First, if you have student loans and you're not in default and they're federal student loans, remember, you have conventional repayment options. So either fixed payments from 10 to 30 years, depending on what you qualify for. You have extended graduated payments between 10 to 30 years. It starts out lower, and every 2 years it goes up to help you, for someone that's more about, hey, I have a potential of more income here in the future, but I need to be a little bit lower here. Perfect opportunity for that. And then you have the different income-driven repayment options. All income-driven repayment options qualify for debt forgiveness eligibility. And then on top of that, you have currently still have public service loan forgiveness eligibility available to you. So if you are in a public service, working for a nonprofit company, you're working for the city, for the state, nurse, teacher, there's a lot of opportunity there that if you qualify, I highly, 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 highly recommend taking advantage of that, because you're then put into a 10-year forgiveness plan instead of a 20 or 25-year. So it's huge, guys. It really is. So, and then if you're in default with federal student loans, your best option is rehabilitation, which you want to negotiate default remarks removed. You want to negotiate reduction of collection fees and costs, which could save you a ton of money, as well as if you are on the offset list during tax time, to be removed off that list once you make anywhere between 1, 2, or 3 payments. These can all be negotiated in most cases. One thing I didn't touch on, guys, if you're being garnished, okay, garnishments suck, okay? I'm sure anyone that's in it knows. If you are currently being garnished with federal student loans, you have a few options. One, negotiating rehabilitation, where you would negotiate a voluntary payment on top of the garnishment. Typically, then it's just going to be $5. After 5 months, they stop the garnishment, and then you make 4 consecutive monthly payments, and then you're rehabilitated. So it's a 9-month program still. If that garnishment is causing a financial hardship, you can do what's called a request for hearing due to financial hardship to see if you can get the garnishment lifted that way. We've done this many times. So there's actually forms for that. What I'll do, Tiffany, remind me once again, I really like to get these forms out there to help people, just because, does it make sense to have someone help you like us? Yeah. But if you can't afford to retain our services, I want to help you guys, okay? So I know this isn't for everyone. Our company, at least our service, that's why we do this. We volunteer our time. We want to give you this information. I'd like to get that out to you guys. I'll put that on the student loan page, though. That way you guys have, it'll just be a little bit more easier to navigate the student loan page for student loan resources. And then also, guys, private student loans or federal loans, but you're someone that has good credit. Not all people in our group have bad credit. Don't get me wrong. Everyone can fix their credit and get there. Some people in our group, which I love, might be coming in with fair to good credit and just want better credit. That's awesome. We have the info. We have the solutions. But if you have, if you have good credit, I'd say 700 plus, and if you have a solid income, employment history, there are a ton of great options for interest rate reduction refinancing for both federal and private loans. So if you guys have any questions on this, please reach out, book a consultation. We'd love to help you. There's no pressure. We'd go through all these different options with you. And the most important thing is it's all about an analysis of your options, making sure it makes sense for your situation now and the future, and helping you make informed decisions to empower you to finally move forward, I should say. Okay, cool. We got one more question. I'll probably cut it short just because we're getting close to the hour here. Another question. I work at a nonprofit residential drug and alcohol treatment program, and I read I may be eligible for loan forgiveness. If I am eligible, does the payment of $0 go towards the 120 payments, or not until I actually make a payment? No. If you qualify for a $0 a month payment, that is a payment, but it's $0. So yeah, all those reporting zero there, that is a qualified payment for debt forgiveness eligibility, regardless of public service or standard debt forgiveness eligibility. So you're looking at public service 10-year, you're looking at pay-as-you-earn 20-year, and then you're looking at revised pay-as-you-earn, income-based repayment, and income contingent at 25-year. That's where the debt forgiveness comes into play. And actually, just so you guys know what that is, a lot of people are kind of confused by that. They'll say, "Oh, I qualify for forgiveness. They're gonna forgive me, 50 grand." Well, they don't do that right out the gates. You have to follow through on the program for the specific term of the loan. And at the end of the term of the loan, any additional principal and accrued interest that's then still due is then forgiven. Okay, so it's not just given to you up front. You have to go through the program, and then forgiveness comes into play. So that is how debt forgiveness eligibility works in public service loan forgiveness. Awesome, guys. Yeah, thank you guys so much for being on here tonight. I had a lot of fun. I love doing these. I want to do a lot more. Jeremy does a great job. Credit TV, make sure to YouTube Credit TV, get on Credit TV. Make sure to keep following the group. For any current clients of Credit Life, join the Credit Life VIP group. This is only for current clients. Anyone that's not a current client, I'm not trying to to make you jealous here, but any current clients of Credit Life, join our VIP group, because during business hours 5 days a week now, you have access to all the coaches to field your questions. So on top of the coaching sessions available to you, on top of our support staff helping you, you now have access to our entire coach staff at your disposal to ask questions throughout your program. So we're constantly trying to give you guys more value. We want to help you, okay? We are not Lexington Law. We are not CreditPair.com. I don't know a single company like us. We are our own company. We're Credit Life, a financial wellness company. I'm the CEO, co-founder. I hope you guys got a lot of information from this. I love helping you guys. I really do care. And thank you guys so much for being on tonight. And I look forward to doing a lot more of these, okay? Thank you again. And also thank you, Tyler. Tyler's awesome, guys. You know, reach out to him, ask questions on the student loan site and the Free Credit Repair advice site. Tyler's phenomenal. He's heading up the student loan division. I'll still help with that and oversee it with him, you know, but he's going to really spearhead that. And, you know, honestly, that's good because I'm really busy. Tyler is just phenomenal. He's organized, his communication's there. He's going to really help you guys out. So thank you guys again. Have a wonderful evening, and I will talk to you guys soon.